Are you as disappointed by what you heard as the market was?
I think there's a couple things. One, it was going to go down anyway. As you know, going into today, Tesla was up 100% from its bottom. So, there were traders and hedge funds playing the name because of this event. So it was going to go down regardless. But I do think that the investor day itself was, it was very aspirational, but it was really short on detail. And I think that's what you're seeing with today's move. And then, I'd say the third thing that was a problem, there really was no product unveil, even though there was a lot of rumors and hype that there might be a product unveil, and there was no updated financial targets. So you put those three things together, and I think that's why the stock was off, like 6% and an up 1% day.
Sorry, Kara, I was just going to jump in there because I noticed on your Twitter and other people's Twitter, you were hanging out with Ross Gerber while you were at the event. And as you know, Gary, he made an activist or a friendly activist bid, so to speak, for the board, which he dropped. His grievance was lack of succession planning, lack of other executives. Were you convinced by all of those 16 names that you heard from that there are others at that company leading the charge?
Yeah, I mean, there are a few things that I think, give Tesla some credit for what they accomplished. I think they made a convincing case. To your point, they have a pretty deep team. And, in the Q&A, I actually took a picture of this. There are 18 people all lined up in chairs in a row, Elon, of course, in the middle. And it did look like they had a pretty deep bench. So they get kudos for that. I think the second thing, they made a convincing case that they can actually drive costs down 50%. They didn't with this new, what they call Generation 3 platform. But they didn't give a time frame on that. It could be 2 years, it could be 10 years. And I think that's one of the, again, data points that would have been helpful to have. And then I think the third thing that, was very helpful is they said Cybertruck is definitely coming this year. That's a big catalyst. There's 1 million, what they call pre-orders, $100 deposit. That could add 50 cents to $1 a share next year in earnings if they even got up to about 100,000 deliveries. So those three things I think were positive. But again, there really wasn't a lot of data to connect the dots, if you will. They made the case that their volumes will go from 1.8 million this year to 20 million by 2030. And that was a big, bold assertion, but there really wasn't a lot of demand elements, by model or by segment to support that. And I think, those are the things that as institutional investor, we just didn't see a lot of.
Gary, what about supply side? What's interesting, they're showing a deep bench in terms of executives. They're showing a deep desire to have a lot more in-house technology, particularly on their chips. Actually, we saw a big move in some of their suppliers today. Do you like that sound?
I like that they're trying to do a lot of it internally because, obviously they cut out the middleman. They're doing it themselves. We own Wolf, and Wolf, because silicon carbide, they made the point that they're going to cut that by 75%. Look, Tesla makes a lot of claims. And, one of the things that, I don't know who said it, but, somebody said it last night, is you can't always take their claims literally because it takes them a long time. I mean, think about Cybertruck. They announced this back 2019, and here we are 2023, and it's not out. So it could or could not happen. So if I'm a supplier and, some of the suppliers got hurt today, I wouldn't get too worked up about it because a lot of times these claims don't materialize with Tesla. So to me, like Wolf, we own it. We think it's still a cheap stock, and I think it's going to be fine over time.
Do you get ultimately then frustrated with master plans, with the fact that perhaps master plan 1.0, 2.0 aren't executed, and we're already talking about 3.0?
Look, Elon is brilliant, and he's yet unpredictable. And as an investor, you don't like the unpredictability of it. And yeah, we get frustrated with it. When he bought Twitter, we were very frustrated by that because, in my experience, it's hard to, run two companies, and Elon runs 3 or 4 now. But Twitter is a whole different animal. From SpaceX and Boring, which he built from scratch, right? So it's bad enough that he's got those two, but now he's got Twitter, which is a total rebuild. And so that's frustrating. It's, it is frustrating that, he often, does a 180. I guess that's what makes him so skilled, and that's what makes him so successful. That, one of the things people tell me about is when he realizes he's wrong, he will make an immediate turn and go in the right direction. And you've seen that over and over again with Tesla. An example is they took radar out of the FSD, and I guess he realized that, high def radar actually added value. So now they're putting the high def radar back in. And I don't know if it frustrates me as especially you get used to him because he adds a lot of value, and he's brilliant, and he adds tremendous value from a stock picking standpoint. But at times you got to be ready to tilt when he tilts.